GM Jelly Gang, welcome back to the Jellyverse channel. I'm excited that you're here. My name is Santiago, and today we're gonna run you through a very deep dive on the market. We wanna answer the question: is Savvy 2 going to launch perfectly with Jellyverse, perfectly in the current bull market sentiment? Are we going to see higher highs for Bitcoin, for say, for the whole market? Where's all of this going? And I think that's a very, very important question to ask, whether you're trading NFTs, whether you're trading Bitcoin, whether you're trading Say, whether you want to get into Jellyverse. Of course, the whole market and the overall situation highly, highly impacts the performance of altcoins, and especially also the performance of the whole markets and NFTs and speculative assets as a whole. So let's have a look into all of the situation. I prepared a lot of interesting data for you, a lot of interesting things we want to look towards this together. And yeah, with this, let's get right into it. So let's have a look here on the prices. Let's get started with this. We saw Bitcoin sitting at 66,000 US dollars. Really interesting. Yesterday, we just had a price of 62,000. So we had a really huge price bump here over almost 7% in a single day. And if we go down here, we also see that the altcoins are very, very green. Solana, 13%. Dogecoin is 5%. Many coins here in the green. And especially if we go down here to Say, currently on place 58, we are seeing here 26% within 24 hours. So we have a huge, massive pump here for Say, pumping back to 57 cents. So that's really, really, really exciting. And yeah, I think it comes down to the question: what happened here? Why suddenly the market is turning green again, and what is going on? And one of the drivers here for sure were the CPI, the Consumer Price Index news that came out yesterday. If you're not familiar with this, let me just super briefly and easy explain it to you. The Consumer Price Index is basically an index, an average among all items, all goods, everything that measures inflation. Inflation and the money supply is extremely important when you trade with risky assets. Why? Because higher inflation means there's more money out there. Once there's more money out there, of course, assets are going to increase in price. Not because they're just worth more, just because the money that is measuring those assets is worth less. So let's have a look here. The CPI numbers that we saw now coming out yesterday were 3.4%. So 3.4% inflation in April, which definitely is not true. We all know that. The way how they measure the CPI is by taking out specific goods and services who are classified as premium goods or something that is not considered to be measured for the inflation. So real inflation is way, way higher. But for them, this logic may apply, and the market takes this number as a measurement. And yeah, we have seen here that inflation started in January with 2.9%, increased to 3.1, 3.5, and the market was anticipating higher and higher inflation. And since we now have the 3.4%, the market believes maybe there is a chance for the Federal Reserve to cut interest rates at some point. We're currently sitting at a very high amount. I think 5.2%. Let's check that out. Federal Reserve interest rates. Watch. You can open this up here on the CME Fed Watch tool. It's very simple here, and you see the current estimate to keep with the current rates of 5.2 to 5.5 is over 90%. So everyone is believing that we're actually going to stick here. The probability that we're going to see the interest rates coming down is still very, very low. And just to give you a better perspective, if you look at this chart, this is M2, this is the overall money supply in US dollar. You can have a look on this insane scenario that we are witnessing here. It's completely ridiculous. The money supply is exploding through the roof. And especially here during the pandemic, we have seen an incredible amount of money printing, which is the reason for this super high inflation. And yeah, the price is going up and shooting up like crazy. We're currently in a situation where we don't have much choices, right? If we have super high interest rates, at some point the banks will fall, the businesses will have problems to refinance themselves, the economy needs the cheap money. So at some point, we will expect that we will see even higher money supply, interest rates going down, and cheap money coming into the market. Once we see that, of course, this is going to be very bullish for the Bitcoin price, for cryptocurrencies in general. And this is why the market has been reacting so positively to those CPI numbers, because they're hoping that with those CPI numbers, the Federal Reserve might tend to cut the interest rates sooner than their plan might be currently. If we look a bit closer to the chart here, we can also see that after this top now here money supply, it looks like we have a slight increase here again looking into 2024. So we may expect higher money supply and therefore higher prices for risk on assets such as Bitcoin. So that's like the macro perspective, like the overall big perspective. If you look from way above on the market, if you look a bit closer into Bitcoin, where do we stand right now? Where are the retails? What is happening exactly? And one of the interesting topics always to have a look on, super easy metric, guys. Just go there, search on Google Trend what is going on with Bitcoin. And Bitcoin is here really on a 45% interest over time. What does it mean? So we have here in, what is this year? Let me get this data point. May 16. May 16 is here the point where we peak, where we mark the peak for Bitcoin searches on Google. And that definitely marks the whole interest, right? How are the people interested in Bitcoin? They want to learn about it. They want to buy it. They want to search for exchanges, so on and so on. And if we look at the current value, we're just at 45%. So we are really not in a scenario where everyone is like searching for Bitcoin, super bullish, super into the market. And that is a very, very good sign, right? So this is very, very important. It seems like, especially retail, currently is not really interested into Bitcoin, even though we're sitting at 66K and we just jumped up 7% in a single day. Let's have a look on the Bitcoin price itself. If we zoom in here, and I'm going to explain a bit more what those zones mean and where from which model this comes from. But it looks like Bitcoin is here about to enter our target zone. The target zone is basically the zone here above 80,000, somewhere in this range, right? We see the Bitcoin tend to spend almost 50% of the time in this green area and almost 50% of this time in this red area. And we aim to, of course, sell in the red area and buy in the green area. And this is a very, very long-term chart. So, of course, I'm zooming out here to see the whole history of Bitcoin over a logarithmic view. So it's, yeah, definitely something that is a long-term chart that you want to use for long-term positions. But it's definitely interesting to see where we are currently, just to get a feeling, right? So it looks like we hit this resistance and then we went down here and had a slight correction, but the market seems to be still bullish. And it seems like we are preparing ourselves to go up here and really break this resistance. If we just measure this, this is, I guess, our target zone. Let me just do it the other way around. So we have it in green. So somewhere in this range is where we aim to come out with, right? And also from a time perspective, that might be even into, well, next year. That doesn't have to play out in the next months. This can be really during the next year until maybe the end of the year. And again, here, this is the same chart, just now in a log format. People do this log format when we have assets that break through crazy magnitudes and it's very hard to see linear growth. Then you use some of those charts to have a linear perspective on the growth. And you can see that Bitcoin has a linear perspective on this. And it seems to be on this resistance that we just covered on the trading view chart. Is the exact same value, just a different format. For those who may believe into the stock to flow model, we have here the chart, of course, as well, just to give ourselves a perspective where we are right now. And I know there's a lot of criticism around this model, which I don't really understand, because I think this model is a really awesome model. It tracked the price pretty well over such a long period of time. And if you are worried about the model to be changed or adapted during the time, I think this is it's not a problem at all. You can just click here on stock to flow and then you find here the very first version of the stock to flow model, and you see here this is basically pretty much on track. Of course, the stock to flow model has huge deviations because we are looking at predictions over huge periods of time. So especially here during that time, people thought, okay, the stock to flow model is completely off. We have a Bitcoin price of 17,000 and the prediction was 64,000. Of course, there's huge deviations here. But the whole purpose of this model is just to give you a perspective on Bitcoin and to see where things are going roughly, like very roughly. And currently we're sitting here at the beginning of the next phase to really exponentially reach a new price level and then move ourselves somewhere around here. I would not expect for Bitcoin to really hit the 500K during 2025. I just don't really believe in that. And I would assume that we see a way slower growth and we maybe hit those targets way, way later, maybe to 2028. But yeah, I mean, we will see how this plays out. I think just interesting for you to always keep this in mind. Where do we stand in terms of the halving cycle and in terms of the stock to flow model? It never hurts to just have a look here and remind ourselves. Bitcoin is still extremely small and will still lead us and support us that the market is going up. Bitcoin currently sitting on place 9 in terms of market cap. We have 1.3 trillion. And if you look at gold, we have 16 trillion. I think we can all agree, especially we as crypto fans, that Bitcoin will flip gold one day. This would bring Bitcoin at a price of $750,000 or more. And if this really happens, then we're of course going to see also huge price spikes in the whole crypto market, in the altcoin market, so on and so on. So guys, we covered already a lot, but I think there's still some more measures that we maybe want to look into it for those of you who have a little bit more patience and want to go a bit more into the details to really understand where are we right now. So let's have a look on the funding rates. Funding rates, what is that? Funding rates are basically the rates that the index exchanges lend you money for leverage trading. So that's really, really important. If funding rates are super high, like here, for example, you see it on the chart, then we can expect that the market is extremely overbought, that there's a lot of leverage in the market, a lot of speculation, and that it's more and more expensive to be actually long on Bitcoin. Once that happens, of course, this has direct impact to the altcoin market as well and to all the other cryptocurrencies. So that's a very bearish sign. And we see that since April, we have low funding rates here, which is really, really cool. I mean, we see funding rates coming up from time to time, and we also see movement here along the way. I mean, Bitcoin was the price 66K here, dropped then to 58. So we have a lot of volatility here. We even experienced negative funding rates during this time, but we generally see that funding rates cooled down a little bit. So if I zoom out a little bit, just to give you a better perspective, during a bull market, funding rates maybe look like this. So you now understand where this leverage and where all this money is coming from. And I think it's very healthy to see that our current funding rate in this area cooled down by a lot. And one of the things I also like to have a look towards to hash ribbon is something that is an interesting indicator. It shows you basically what the miners are doing and what, from a mining perspective, when the miners are capitulating. And we saw that this happened actually some time ago. We saw this the last signal coming in here in August 10 when we were sitting around 30,000 US dollars. Then we started basically our bull run, climbed up here to the 70,000, and so far we haven't seen a signal yet. Actually, let me zoom down here. I'm just seeing that. Interestingly, yesterday we saw another signal. Wow, okay, that's new to me. I haven't looked at the chart, so that's really, really interesting. That could mark the beginning of the next wave for the bull market. Of course, I never bet entirely on just a single indicator, but the hash ribbon is definitely. Let me just. What happened here? What the fuck? But the hash ribbon is definitely an interesting indicator that doesn't pop up often, and yeah, always gives us good entry points. So for example here, for example here, for example also during this area. For example, during this area we had a lot of wrong signals with our double top, so it didn't work out. But also here, all of those signals were nice prices. So maybe the one that we just received here is also an interesting signal. Power law model we already covered. Percentages of addresses in profit. I think this is very, very important. We just spiked up here with the recent price increase yesterday. Actually, yesterday we had, or May 14, so 2 days ago, we had 88 addresses in profit. Right now, 95 addresses are sitting in profit. This is definitely huge. So keep this in mind. We have most of the participants here in profit, which is definitely a sign for, pretty hot bull run activity going on here. And one of the interesting things that I also really like to look towards to, and I think this is also the last one for today, hodler net position change. So what are actually the guys, the good ones, the good traders, the people who buy low and sell high, what are they doing? And we see here the hodler net position change during our spike up here from 64,000 up to our 73,000 and more. During that time, we saw a lot of people selling, a lot of people that usually hold the coins for a very long time, they sold a lot. But In the recent weeks, since the April 25, we have seen those people buying more. We have seen those people buying the dip. And this is very, very interesting because those people tend to do good decisions. Let's zoom out here. We have here huge bull market in 2013. We see here the outflow for the long-term holders. Then long-term holders start accumulating. We have here the huge spike December 14. Then we see here bear market for a long period of time. Long-term holders accumulating again. We see here the crazy bull run up in 2017. Long-term holders selling again. So you see the pattern. So that's a very, 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 very nice metric to understand. Wait, hold a minute. When am I buying and when are the smart people buying and selling? So if you haven't sold during this area, you're maybe positioned differently than long-term holders. If you did not buy the dip yet because you were scared, again, you may position yourself different than long-term holders. Not saying this is right or wrong, because we of course don't know how the market is going to play out, but it's just interesting to compare this to what other people are doing. Guys, I think we run through a lot of information. I don't know how long this video is going to be, but I really hope you enjoyed this and really hope that you understood all of those things. If you want more of those videos, if you like to get more insight in the market and study more with me, how I'm positioning myself and what am I doing, and in terms of what could this mean for Jollyverse and Say, of course, that's always, I think, a very interesting topic. So then let me know down in the comments, because it's a lot of work to prepare all of this data and to go through all of this with you. So really let me know if I should do more of this. With this, guys, I anticipate we're going to have a very nice time. Things look bullish to me. People around me are bearish. Google trends are low. Money supply will go up probably. Interest rates may come down. We have long-term holders acquiring Bitcoin again, and we see CPI coming down slightly. Bitcoin Fear and Greed Index reset it again. Expectations reset it again. People are a little bit, in the summer vibes, a bit ignoring what's happening. And I think that's the perfect time to open the one or the other long position and see what we can see maybe in the next 6 months, 12 months, or even 18 months. And with this, guys, have a long time horizon. See you soon. Let's get ready for Say V2. Let's get ready for the Jellyverse launch. Let's stack more Bitcoin and let's prepare ourselves for this bull market. I'm super excited. Have a nice one. See you next time. Bye.